are in uncharted economic territory, both domestically and globally. And since 70% of our GDP is driven by consumption, retailing is therefore on the front lines.
Let's go!
My name is Neil Cole, and I'm Chief Executive Officer of Iconix Brand Group. And we're a company that owns a lot of brands, about 27 brands worldwide, of such famous names as Peanut Snoopy, London Fog, OP, and Danskin, and various others.
My name is Alexis Maybank, and I'm founder of a business called Gilt Groupe. Gilt Groupe offers to about 4 million people in this country access to fantastic insider prices on designer goods, goods for your home, designer goods for your children, and even at this point, luxury travel and other services.
Hi, my name is Joe Gromek. I'm the CEO of the Warnaco Group, the $2.5 billion apparel company. We're dominated by Calvin Klein. Calvin Klein represents about 75% of our business. We also have a Heritage Group, which includes Speedo, Chaps, and core intimate apparel brands.
My name is John Long, and I work for Salmon, and we are a global management consultancy. So we've just recently done a survey of 8,000 U.S. consumers on what they expect to do for the holiday season in terms of spending. And we've also surveyed 100 U.S. retail executives at some of the largest retailers across the United States for what they're expecting for this holiday season and how they're looking at 2012.
I'm Andrew Tilton. I'm an economist at Goldman Sachs. I'm focused on research and forecasting for the U.S. economy, what's going to happen to economic growth, to interest rates, to inflation, and so forth.
I'm Robin Lewis, CEO of the Robin Report, which is a strategic knowledge report that we publish and distribute 8 times a year. And we deal with the retail and related consumer products industries. So this seminar today is a collaboration between the Robin Report and Fashion Group International. Fashion Group International has been doing these seminars for some time, and we have decided that it would be great to partner with them. And we're starting a C-level series of these seminars, and this will be the inaugural seminar.
It's been a difficult year. We've grown much more slowly than we or other economists expected. I think there's still a substantial risk that we fall back into recession over the coming year. So it's been a difficult year so far. We're hoping to muddle through with about 2 to 3% growth over the coming year.
If you are looking at the market today, one could say this is the precursor of Apocalypse 2008. I don't choose to believe that. I think we are going to have very tough times over the next quarter, at least, through the holidays. I think it's going to be a struggle for retailers to grow their businesses this season. And I think throughout 2012 it's a tough economy. It's going to be for 2 or 3 years until we deleverage our economy to a point where we can sustain it.
We're fortunate in that, based on the diversification that we have globally, we're able to take advantage of growing markets. And based on that, our business has been quite strong. We are powerful in Latin America, so Brazil is a driving force, as is Mexico. We're also very strong in Asia, with excellent businesses and growth in China, Korea, and also in Hong Kong, and other parts of Southeast Asia as well.
Business is okay. We're continuing to grow in a very tough world, but we've have a lot of great partners, and we're trying to continue to grow and be more profitable.
Today's economy, it's been fine. So we've seen a fundamental shift in the consumer looking for greater value, and that's something that is very intrinsic to what we offer at Gilt Groupe. Everything you see on our site comes at a special value, great quality at great value, often prices up to 60% off.
So the highlights are that our consumer panel is telling us that they expect to spend less this holiday season. With that being said, what we've noticed since the recession is that consumers are telling us they want to spend less, and yet they're continuing to spend more. And so we're obviously in a pretty unpredictable economy. Retailers, on the other hand, are expecting that although their customers are telling them that they want to spend less, that in fact they're going to see higher retail sales this holiday season than they did last year.
On the consumer specifically, I think the biggest factors that have caused a weak growth this year have been the increase in oil prices that we saw early in the year and the lack of any improvement in asset prices in stocks in particular. We've had actually quite a lot of market volatility recently, which I think will make consumers more cautious about their willingness to spend going into the holiday season.
Well, we've certainly been looking at, for the last number of months, a tale of two consumers. The consumers with incomes and with jobs are feeling, although less confident, like they can spend, while the consumers that don't have jobs or that are worried about losing their jobs have not. And so definitely we have a luxury consumer out there who's spending money and a value consumer at the lower end of the income scale who is still being very cautious about how they spend, have traded themselves down from Walmart to the dollar stores and continue to do so.
Our customer is the young working professional who's increasingly behind a computer, less time to go into stores, chic, high income, high education, and very much concerned by how they're presenting themselves. So during the day, this is a quick escape. They come in, they see for 10 minutes on our website what we might have available for sale, make fast decisions. It's good use of their time, and they're out in usually under 10 or 15 minutes.
Well, certainly from a pre-recession standpoint, incomes are actually now above pre-recession levels. And so that bodes well for the consumers that do have jobs. The truth is that we're still saddled with very high unemployment. We haven't seen a significant change in that for many months, in fact, in years. And so that is the biggest challenge to the overall economic system as we move forward.
Well, I think certainly multi-channel and diversification are key. So the more channels you can be in to speak to your customer is very important, and the more geographies you can be in if you got a powerful brand. Our powerful brand is Calvin Klein. So we can enter just about any market. The brand is very well known. It's been around for about 40 years, and the amount of marketing that's spent on the brand globally is enormous. A few $100 million annually, so that drives consumer awareness and helps us be successful as we enter new markets.
Technology is driving, in new ways to do business, whether it be e-commerce or whether it be all the changes in marketing through social media. So lots of innovation and trying to keep current with the consumer.
We want to be in brick and mortar. That's why we operate over 1 million square feet of retail space today. We want to be in online, and we operate Calvin Klein underwear and jeans sites as well as Speedo sites. You want to be in wherever you can be in various different channels of distribution, wherever the customer's shopping. Take advantage of their wallet when they're out to buy something.
A big believer in both different vehicles to grow a business and relate to the consumer. I don't think you can. I think it's good to, not have one or the other, but the ability to do both.
Well, the interesting thing about our survey is that our retail executives told us that online is the biggest change for their businesses over the next 5 years, and certainly it's exactly what we've been seeing in the last number of months, that online sales for most retailers are up double digit. It's, in many cases, their single biggest area of growth, and we expect for that to continue. And in fact, it is not cannibalizing off of their core businesses, but in fact creating an incremental opportunity to reach more customers and sell them more items.
The best tip is to do everything they can to keep their current loyal customers happy, excited, provide them something new, because your customer, in this share wars environment, the only two ways you can grow is to steal a customer away from a competitor or to get your customer to buy more and more often from you. It's twice as costly to steal a consumer away from a competitor than it is to get your customer to buy more from you. So whatever you can, and they're twice as profitable. So whatever you can do to get your loyal customer, your current customers, to keep coming back. And that you've got to give them new. You've got to have an exciting experience in your store, do a fashion show, do an event, do something to get them to come in there.
There are clearly challenges to growth in a lot of the major economies, including Europe and Japan. But we do think that over the longer term, many emerging markets, countries like China and India, will see much faster growth than what we have here in the U.S. At least if we look out over the next 5 or 10 years, that's very likely to be the case.
Essentially, we listen to our customers, they ask us for certain product, we expand in those categories, and we assess it based on what is something that's so desirable that people would drop everything at noon to be there to shop for. And that's what we go after. We're also in more international markets too. All of our luxury hotel stays that are sold through our property Jet Set are available anywhere in the world to any customer. And that same will be true for Gilt Group's products as well.
Calvin started out small and turned into a phenomenal, successful global lifestyle brand. I think for young designers, staying focused is very important. True to yourself. You got to work hard, be smart. As well as being a great designer, you need a business. Either you have to be a great business person or really join at the hip with a great business leader as well. So I think that tandem of business plus design will get you in the right place.
I think the key is focus. In my career, finding something what you're best at and not trying to do everything and just do one thing well. And try to be find out what look in the mirror, what are you best at, and focus on that rather than trying to do a little bit of everything.
What's your favorite success story in one of your brands?
Favorite success story.
OP?
OP is a wonderful success story where when we bought it, it was doing about 30-40 million, and this year it's going to do over $1 billion worldwide.